the basic premise of DeFi and sort of like the enormous promise that was supposed to bring is that you can build a financial system that is trustless. You don't have to trust any middlemen like banks or traders or any other type of agent, and then you just trust the code in the system. And the big irony here is that if you take a trustless system and build it on a type of money that is highly dependent on trust of the issuer, of the regulator, and the changes in global regulatory climate, then in that case, building a decentralized application on top of this, monies like that doesn't really make sense. So, yeah.
So to just help the audience who's new to this, I think everybody understands why stablecoins exist. Now you're saying, hey, these stablecoins are going to get regulated, and who knows what the people running these stablecoins, who knows if you can trust them, who knows what regulations they have today, not many, and which ones will come in the future. So while USDC, Circle's stablecoin, is going to be a public company and it's in the United States and it's being audited by US auditors, or they have attestations from US auditors. Something like Tether is, obviously a little bit more opaque. What are you doing then? If you're not holding the peg to dollars and you don't have a bank account with them, then where is the money and for your stablecoin living? And then maybe also you could explain to people what's a functional definition of DeFi.
Got it. So that's a lot there.
Yeah. But let's start with the functional definition of DeFi. What does it mean?
Yeah, so the functional definition of DeFi is that if you look at traditional finance, most of what happens is based on sort of a hierarchy of centralized middlemen. So, for example, if you look at the U.S. economy, everything starts from the Fed and the U.S. government, and then there's a consortium of commercial banks that do business or have an exclusive rights to do business with the central bank, and then fintech apps and so on and so forth. So how the system works is that you need to trust middlemen at each step of the layer in order for the financial system to all work. In decentralized finance, the idea is that you don't need to have any one of those middlemen, right? You can just simply put your trust or at least have literacy in the code that you happen to be running for, let's say, your savings app, for your lending needs, for your FX swaps, and so on and so forth.
Got it. So we talked a little bit about how other stable coins are keeping some sort of assets, and these are now tens of billions of dollars. I think Circle is at 26 billion and Tether was at 63 billion last I checked. So these are very large pools of capital. If I were to buy Terra, or I'm not sure what you call your coin, is it just called a Terra? Am I correct in calling it that?
Terra USD, yes.
Terra USD. So if I were to buy a Terra USD dollar for $1, where does the dollar go? Where does it live?
Yeah.
What happens?
So Terra USD is in sort of a burgeoning class of stablecoins called algorithmic stablecoins. And the idea is there that while the currency remains itself pegged to a fiat currency like the dollar, it's not backed explicitly by a dollar in the bank account. Instead, it uses a set of game theoretic incentives that live on a blockchain to make sure that the currency retains its value against the dollar. So the mechanism is relatively pretty simple, and there's sort of like a rich ecosystem of fast followers that are doing very similar things. But the idea is that for every Terra stablecoin that's issued, you need to burn $1 worth of an ecosystem token called Luna. And vice versa, when you're looking to redeem 1 Terra USD, you can burn that Terra USD and then mint $1 of Luna at any given time. So the idea is that when Terra USD, due to increase in demand, starts trading slightly above $1, let's say $1.10, an arbitrager has an incentive to burn $1 worth of Luna and then mint 1 Terra USD and then sell it into the market for $1.1, thereby capturing a 10% arb spread. And the reverse direction, the same is true. If Terra USD is trading at a discount, you can buy it and then swap it to $1 worth of Luna and then capture 10% arb that way. So essentially, by using a set of arbitrage mechanisms against the secondary currency, Terra USD is able to retain its value.
Okay. So there is a coin called Terra. You can buy that where? I can go on Coinbase and buy it. I can buy it on your website. It exists on other exchanges. How does one buy Terra? And then where does Luna exist? Is this Luna is your currency or it's some open standard?
Yeah, so Terra USD, you can purchase it from a number of different exchanges like Bitfinex, Qcoin, and lots of different service providers. For Luna, it's a similar situation. It's a currency that sort of provides for network security of the overall Terra blockchain. So you can sort of think about it as a stability counterpart to Terra USD, and it also trades quite widely on various different exchanges.
And the price of Luna changes, but the price of Terra does not?
Yes.
Got it. So when I go on to one of these exchanges and I deposit fiat into them, they would give me in exchange some Lunas or some Terras.
Yes.
Got it. And then if the Terra price changes, why would the Terra price change if it was pinned to $1?
Sure. So normally it wouldn't, but it's just that most of these cryptocurrencies trade on order books, right? So if there doesn't happen to be ready inventory available within the time period that you need it, then in that case, due to supply and demand, if demand curve starts to shift, then in that case, the price is going to inch up.
Well, why wouldn't you, as the person who controls Terra, just print more Terra?
Oh, so we don't actually print Terra. So anybody that has Luna tokens can burn it to mint Terra. So it's a very decentralized redemption and mint mechanism.
So if I own Lunas, then I can make my own Terras. If I make my own Terras, people could be trading them. They could start to grow in value. And if there weren't enough supply, like there haven't been enough supply of Bitcoins or Ethereum tokens, they could go up in price. But then there's an incentive to then burn tokens. That's the part I don't understand.
Sure. So when the incentive to burn tokens manifests is if there's too many people that are selling Terra USD, so it starts to trade at a discount to $1, then in that case, you can buy 1 Terra USD at that discount, let's say 10 cents, and then you can swap it on the blockchain against $1 worth of Luna token. So, for example, Luna right now is around $7. So if you swap in 1 Terra USD, it's always going to give you 1/7 of a Luna at that current market price.
Hey, everybody. I thought I would bring Christina Cacioppo. I pronounced it correct. I'm hoping, Christina.
You got it. Yep.
All right. You're the founder of Vanta. People have been hearing your ads on the pod for the last year. And I thought it'd be fun to have you on and you to explain why you created Vanta and what SOC 2 is and why it's important people get it right. So let's start with, what is SOC 2 for people who are just realizing they have to become SOC 2 compliant?
For sure. So SOC 2 is, at its high level, it's sort of a customer asking you to prove your security. So if you've heard about one, it probably you're probably a B2B company and you're doing sales, and somebody asks you, hey, can I have your SOC 2 report? Or, hey, can you go through security review? Or they usually don't phrase it like this, but hey, I'm going to put a bunch of data in your product and I want to know if you're actually going to be secure or leak it over the internet. So they ask you to get a SOC 2 report.
And these SOC 2 reports are basically a third party saying, hey, you can trust this company with your data. It's like a standard, correct?
Exactly. Yeah. So a third-party auditor comes in, makes sure you're in good shape, and writes that report.
All right. Thanks again, Christina, for explaining to us why this is so important for SaaS companies, especially when you start getting into that sales process. And you've been very generous. You're making a nice offer. If people go to vanta.com/twist, what are they going to get, Christina?
They're going to get $1,000 off their Vanta subscription. And we're a big fan of Twist listeners.
Oh, thanks. I know you had a great response from our listenership, and they always tell you they found you here. So thanks to our Twist Army, and we'll see you all next time. Bye-bye.